Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And hello, I'm Yatin Mota.
Well, Yatin, we were starting out, the week with a manic Monday, but that was clearly stemmed by the solid recovery we saw in the second half of the session. In fact, the Nifty ended the day above that 22,100 mark. After slipping below that 21,850 mark as well, right? So it's a very solid comeback. In fact, the Sensex has recovered nearly 900 points from the day's low, and the Nifty Bank Index has a big role to play in that, given the fact that we saw an 800-point rebound on the Nifty Bank Index as well. Pharma was in fine health thanks to shares of Cipla and Lupin that saw a good up move. You had other sectors also, staging a comeback, and aside of banks, you also had metals do pretty well, 1.5% gains coming in on that index as well. Realty, IT also staged a good comeback. If you look at the India VIX, Yatin, volatility has spiked once again. 12% jump in the India VIX index. In fact, it hit a fresh 52-week high of 21.48, settling around that 20.5 levels. So volatility, of course, is the name of the game. Has been in the last 12-13 sessions. We have seen a very, I think 90% kind of an uptick in the India VIX index. Individually, if you look at the gainers, UPL after good numbers, stock was among the top Nifty gainers. Cipla on the back of comments from management stating that they expect resolution on the Goa unit soon. I think that is something that fired up the stock. Asian Paints, Adani Ports, Divi's Labs, some of the other movers. On the flip side, Tata Motors, 8.5% downtick. Of course, we'll be talking about the stock in more details in a bit. But JLR margin, they've given a flattish guidance for that. I think that came as a big disappointment. Plus, there are a couple of brokerage downgrades as well there. BPCL, NTPC, Titan, ONGC, SBI. These were some of the other notable losers on the Nifty, but a lot of result reactions in the broader end of the markets, Yatin, and stocks have been reacting very sharply.
Correct.
Look at Sirma CG, SG, that stock tumbled over 16%.
Correct.
Take us through some of them.
So, let's talk about the gainers first. BEML, strong results. That stock went up 15%. ABB, 11% up, top F&O gainer. We'll talk about it in detail. Hindustan Zinc, Siemens, all of these stocks are making strong momentum. As Nandita was mentioning, Sirma SGS, that stock, surprised negatively on the earnings front. Stock down 20%. Bank of India also, I think the results disappointed the street. That stock was down 10%. Tata Motors 8%. E-Clerks, and stocks like Praj Industries, Devyani. In fact, today during the market hours, we had Zomato also. That stock fell nearly 3.5% after, the street expectation was for a higher margin, and the margins came in slightly lower than the street expectation. So, Zomato, that stock went as low as 7% down in trade, but, managed to recover somewhat, 3.5% kind of, downtick coming in for Zomato and VIP Industries as well.
Right, I think we also had a new listing today, Indegene.
Indegene was good listing, 20% premium is what we saw. And in fact, today the market was weak. The street was expecting a listing of 700 plus, but I think the markets were not that, grateful given the fact that we opened with the gap down. Listing was slightly disappointing versus the expectations, obviously. But yes, when you are looking at it as an investor or a person who got allotment, 20% listing is quite decent.
That's correct, and we have another IPO opening up. It's the Virat Kohli backed Go Digit that will be opening on Wednesday. Of course, we'll be keeping an eye on that as well. So activity continues in the primary markets as well. But let's talk about the stocks that are on our radar this afternoon. Of course, Tata Motors is a big one because it saw an 8.5% cut today. Top Nifty loser, of course, revenues. EBITDA, these were all in line, but I think it was the guidance, on JLR margin front, that disappointed street because they've given a very flattish margin guidance for FY25. And, if you look at analysts, they say that, marketing expenses with respect to JLR may rise going forward. And even when it comes to the CV business, near-term CV volumes are likely to be weak, according to analysts. Shares, by the way, saw the biggest single-day drop since February 2022. Aside of that, if you look at some of the comments that the management has made, well, for FY26, they have, retained their guidance of achieving 10% EBIT margin when it comes to JLR. For FY25, they've also said that they will be debt-free at JLR, but they've refrained from giving any volume guidance when it comes to JLR. If you look at some of the brokerage views on the stock, couple of downgrades coming in. First one from Nomura, they have downgraded the stock to neutral, target price at 1141. CV growth is likely to moderate according to Nomura, and globally there has been a demand crunch when it comes to autos. So that is something that could weigh in on JLR and the demand going forward for the luxury business of Tata Motors. Aside of that, Nomura has also pointed out that the stock is in fair value zone at 5.4 times FY26 EV to EBITDA. Morgan Stanley as well has downgraded the stock to equal weight, target price at 1100 rupees per share. Even Morgan Stanley has pointed out that all the good news is already in the price. Domestic brokerage Nuvama has a reduced rating. Target price has been maintained at 940 rupees a share. And Nuvama has also pointed out that the JLR CV business will moderate going forward. Of course, Yatin, from 400 rupees to 1000 rupees, that journey was crossed very quickly for Tata Motors. Hence, it's not surprising that brokerages are time and again pointing out that, stock is already in fair value zone and all the good news is already in the price. Of course, the stock has seen a sizable gain if you look at the 1 year charts as well, and from 400 to 1000, I think that distance was covered in less than 1.5 years if I'm not mistaken.
Absolutely, and the stock has performed quite well in the last 2-3 quarters. Returns have been good, earnings have been good, no complaints about it. But I think the street has its own way to express that, FY25 the expectation was high, so, we'll book some profit quickly. It is all a matter of what the market expectation was and how much was priced in. Not to say that they have not done well. In fact, the free cash flow was much better than expectations. In fact, GLR is expecting good cash flows for FY25 as well when it comes to FCF. So, all in all, a good show, but yes, some bit of profit taking on the back of concerns that FY25 could be slightly lower on margins versus what the street was expecting. But yes, the management clearly said that they should be able to maintain their margins. But what surprised on the margin front today was ABB. Now, the fourth quarter results for ABB, which is Q1 for them because it's a calendar year close company. The margins were 52% better than the street expectations. In fact, we had a low raw material cost which aided the bottom line for a company like ABB. Now, Jefferies has a buy call on ABB with a target of nearly 8850. The key reason Jefferies believes that ABB could do better is the kind of roadmap which we see coming in from higher capex from private and public sector companies, as well as good capex which comes in for the electrification and the railways business. Now, obviously the order inflow also moved nearly 15% on a year-on-year basis, and obviously post elections most brokerages are expecting that the order book for ABB will move further. In fact, the management says that there is no material one-off in margin, but they said that the margins because of low raw material cost were better, and from here on the margins could normalize because once again the commodity costs have slightly started rising. Renewables is a moderate growth area right now because the base is now high, but still ABB expects that the renewable energy business in which they service a lot of these solar and wind power companies should be doing better off in FY25. The stock ended up nearly 11% higher, closing at the day's high.
That's right. Of course, brokerages also believe that the runway for growth when it comes to ABB is pretty strong, and the order inflows are likely to continue post elections as well. Of course, BSE Capital Good Index was also fairly up on the back of the kind of rally we saw in shares of ABB today. Another stock that's on my list today is Polycab. It's the mid-cap poster boy, so to say, Yatin, given the fact that it has given 10x returns in the last 5 years. Of course, numbers are strong. Over the last 2 sessions, the stock has gained somewhere around 10% or thereabouts. Revenue, profit, both of these parameters saw a 30% jump on a YOY basis. Cables and wires segment also saw a strong 30 to 40% volume growth in FY24. Now, the government as well as private capex, uptick in real estate are some of the reasons that have aided volume growth for Polycab. In fact, the government is spending a lot on infrastructure, electrification in villages. Also, they are trying to have a Wi-Fi in every village as well, right? So there's a lot of work going on there. So that aids the company, and the construction line is also growing as the industry is expanding in cement and steel plants. So a lot working in favor of Polycab. In fact, management expects strong demand to continue for the next 5 to 7 years, and they will be spending at least 700 to 800 to 1000 crore rupees on capex every year for the next 3 years. The capex plans for the next 3 years are in place. Let's see what the brokerage verdict is on the stock. Motilal Oswal has a buy rating, target price of 7,850 rupees per share, and of course they have hailed the strong performance in the cables and wires segment, in which it has a leadership position and has strong margin delivery as well. They have raised the EPS estimates by 5% for each for FY25 and FY26. Meanwhile, Citi has also raised the target price at 7,708 rupees. So analysts all in all are expecting upside of 30% from current levels. Of course, stock is up 90% in the last 1 year. We did see some blip on the horizon in January when there were reports of IT raids. And at that point of time, there were a lot of concerns that the stock would see a de-rating. But since then, the stock has staged a very good comeback of over 60% or thereabouts, Yatin. So, mid-cap poster boy, so to say, Polycab, and the rally continues.
Rally continues, and the company's performance also has been seen improving, especially with their FMEG, which is a fast-moving electrical goods segment focus, which clearly is a distinguishing factor versus other peers. That's all on the show. Nandita, we hope that this rally continues.
Exactly.
It has been a lot of what do you call the days of momentum,
roller coaster,
and more importantly, the PSU rally that we saw few months back, the mid-cap rally that we saw is clearly missing, and the investors today clearly cheered the up move which came in, wherein the markets tried to bounce from that 21,800 level, which is a key support zone right now, precisely bouncing from those levels.
Right, I think it was a replication of what we saw on Friday. We saw a good comeback from lower levels, and I hope that the momentum that we saw today continues the rest of the week. But with that, thanks a lot for tuning in from me and Yatin. It's a goodbye, but you guys stay tuned to Money Control for all your other news and updates.